What if you could invest into the best disruptive innovation companies at once and get 200% returns annually? Would you do it? Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe, and I really hope you keep investing and watching your portfolio literally creating your future. As you probably guessed, this video is going to be about innovation, disruptive technologies, and how this can be used to improve your investment portfolio if you're into that, and what is there actually in the investing world that you can look at least watch and observe that potentially can become an interest of you so you know what's happening. I'm not really a big fan of managed funds, not at all for mutual funds, but I actually sometimes look at managed ETFs because some of those are invested in the companies that I really like, and I like the whole idea about the ETFs because you can invest all at once in a bunch of different companies. And as I am myself a lot into innovation, disruptive technologies, and into the future thinking and how we can create a better future, that's why I actually look at the managed ETFs that track something like that. And what is disruptive innovation? It's the introduction of technologically enabled product or service that is potentially can change the way the world works. And there's actually a really good set of ETFs that tracks all this kind of innovations for different types of innovations as well, like financials or robotics or space and all that. And the name of those ETFs is ARK, Active Research Knowledge. ARK is an investment management firm that offers a variety of exchange-traded funds, ETFs, that focus on disruptive innovation. And these ETFs contain stocks with the potential to disrupt their industries, including Tesla or Square or Teladoc Health. And ARK ETFs experience phenomenal returns over the last couple of years, and that is why they started to become more appealing to some of the investors. But the question here is that, are these ETFs still a really good investment for you? And there's no doubt this ARK ETF seen a wild success in recent years. For example, their flagship ARK Innovation, ARKK, has experienced a crazy return of 175% over the last 12 months. Just think about it, 175% in 1 year alone. And the ARK Genomic Revolution ETF, ARKG, experienced a crazy return of 186% over the last 12 months. Crazy, right? And sometimes, because of the FOMO, it's really hard to pass by funds like this and not invest into them. But it's very important to know that any historic returns would never be able to predict future success. Just because the fund experienced a pretty crazy success over the last year or two, it doesn't mean they actually can sustain that going forward. And for ARK ETFs, it's also a very important thing to know is that these ETFs are pretty new. The oldest one they have in their portfolio is from 2014. And the recent ones are only 1 or 2 years old. And we don't have this long-term historical data that we can look at in order to determine if these funds can sustain over the long-term period. And of course, the higher returns you're getting, the higher the risk of your portfolio. ARK's goal to invest into the most innovative and cutting-edge technology companies. And while those companies can experience explosive growth, they're also more volatile and riskier than other well-established companies. So let's quickly take a look at all the ARK ETFs and see if there's any reason we need to invest into those and why and how to know which one is the best one for you. All these ETFs have the same MER, the fee, is at 0.75%, which is on the higher side if you compare it to any other passively managed ETFs, but it's actually on the lower side if you compare it to mutual funds, with an average fee of 2.3%, and it's actually at the same level if you compare it to the other actively managed ETFs. First of all, I want to mention the name who is behind all these ETFs in the first place, which is Cathie Wood. I think she's very smart, she's an incredible woman who ran these ETFs over the last 5-ish years, and she showed that she can do her work, she knows what companies to pick, when to pick those, when to sell other companies that are not performing well, and how to provide these crazy returns to all the investors. She's very smart and she's one of the people who I actually admire. I actually call her Elon Musk in skirt. Now let's dive in all these ETFs and see what are those all about. And the first one is ARK Innovation ETF. The ticker symbol is ARKK. And this one is the ARK's flagship. It's the first one created and it's the biggest one they have in their ETFs portfolio. And companies within this ETF include those that rely on or benefit from the development of new products or services. This ETF has around 22 billion in their assets under management, and since the inception of this ETF, the average annual return is at 34%. But just over last year, the return was 175%. And since the beginning of this year, this ETF actually dropped around 30%. So some would consider this a good buying opportunity because they're very low compared to their all-time highs. But some other would think that they're still going through their bear market, meaning that they're still going to be going down for some time. Looking at their portfolio, their top holdings include companies such as Tesla, Teladoc Health, Roku, Square, Zoom Video Communications, Shopify, yay, hello Canada. Then they have Spotify Technologies, Twilio, and Unity Software. I have a couple of shares of this ETF in my portfolio just because I like innovation and I truly believe that companies who are working on disruptive technologies can actually improve our world and make it better. And I like to hold a bunch of companies at once, meaning through the ETFs, so I don't have to choose which innovative company is going to perform better than the other. The next ETF they have is Autonomous Technology and Robotics ETF. The ticker symbol is ARKQ. And companies within these ETFs are focused on and expected to substantially benefit from the development of new products and services, technological improvements, and advancement in scientific research related to, among all other things, energy, automation and manufacturing, materials, and transportation. And these companies may develop, produce, or enable autonomous transportation, robotics and automation, 3D printing, energy storage, and space exploration. This ETF is way smaller than the other. They only have around $3 billion in assets under management. They also drop in price significantly, around 20% or so since the beginning of this year. So they might potentially also represent a pretty good buying opportunity if you think the companies that they have in their portfolio is actually starting improving going forward. And this ETF has also been around for the last 6 years, and the average annual return they have since then is around 25%. The top holdings they have include companies such as Tesla, JD.com, Trimble, Kratos, Alphabet, which is basically Google, Baidu, Teradyne, Iridium 3D Systems Corp, which is into 3D printing, and NXP Semiconductors. As you can see from the first two ETFs we looked at, they're pretty bullish on Tesla, both of them included in their portfolio, around 10% actually of their portfolio invested into Tesla, which is a pretty big chunk, so you gotta keep that in mind. The next ETF on the list is the Next Generation Internet ETF. The ticker symbol is ARKW, and companies within this ETF are focused on and expected to benefit from shifting the basis of technology infrastructure to the cloud. These companies may develop, produce, or enable technologies such as cloud computing and cybersecurity, e-commerce, big data and artificial intelligence, mobile technology and Internet of Things, social platforms, and blockchain. This ETF has around $7 billion in assets under management and also been around since 2014. It showed a pretty good performance since the inception, around 40% annually. And within last year alone, they returned a crazy 182%. But also, hear me out here, that since the beginning of this year, so since January or February this year, they actually lost around 40%. So you see, the previous returns will never ever predict the future success. But who knows, maybe right now is one of the best buying opportunities for companies like this or for ETFs like this, while they're in their deep territory. The top holdings of this ETF include companies such as Tesla, again, the top holding of 10%. Then we have Shopify, hello Canada, and Twitter, Teladoc Health, Grayscale Bitcoin Trust, Square, Spotify Technologies, Roku, Twilio, and Coinbase Global. So as you can see, the companies in their portfolio actually sometimes overlap. So you might look at all these ETFs and compare their holdings and choose one where you think the holdings are the companies that actually you like and you would like to invest in. Let's move on here and look at the next one, which is Genomic Revolution ETF. The ticker symbol is ARKG. So the companies within this ETF are focused on and are expected to substantially benefit from extending and enhancing the quality of human and other life by incorporating technological and scientific developments and advancements in genomics into their business. The companies held in this ETF may develop, produce, or enable technologies such as DNA sequences, targeted therapeutics, bioinformatics, molecular diagnostics, stem cells, and agriculture biology. This ETF has around $9.5 billion in assets under management, and they've also been around since 2014. They also showed a pretty good performance since then at around 27% annually. And this one actually exploded like crazy last year with a return of 186%. And also, similarly to the other ARK ETFs, and also to the other tech stocks, to be honest, this ETF dropped since the beginning of this year at around 40%. So, where it's gonna go next? Nobody knows. Looking at the holdings of this ETF, there's actually a difference here. There's no Tesla. Nice. So the companies here are Teladoc Health, Exact Sciences, CareDx, Regeneron Pharmaceuticals, Pacific Biosciences, Novartis AG sponsored ADR, Vertex Pharmaceuticals, Ionis Pharmaceuticals, Takeda Pharmaceutic, and Fate Therapeutics. And I know only one company from this entire list, but it's pretty cool to see that how many companies are out there who are actually working on genomic revolution. And if you think this is the field and area that's going to explode going forward, this is the best ETF that you might consider. And the next one on the list is Fintech Innovations. The ticker symbol is ARKF, and this ETF invests in the companies that has innovations that combines finance and technology, which will include things like transaction innovations, blockchain technology, risk transformation, frictionless funding platforms, customer-facing platforms, and new intermediaries. And this is one of the newest ETF on the ARK's list. They've been around since 2019. And they have around $4 billion in assets under management. They also perform pretty good over the last couple of years, with returns around 55% annually. And similar to the other ARK ETFs, they also lost around 20% since the beginning of this year. And I have a couple of shares of this ETF in my portfolio as well, because I believe into fintech innovation, and I think there are some disruptions going to be happening pretty soon in this area. And the top 10 holdings they have include companies such as Square, Shopify, C Ltd, PayPal, Zillow, JD.com, Pinterest, Tencent Holdings, Adyen, and Twilio. As you can see, the companies they're adding into their portfolio are the companies who are working on or has some innovation in the areas of their respective ETFs. And the last ETF on their list today is actually one of the most interesting for me. It's around space exploration. And the ticker symbol is ARKX. And this ETF includes companies that have their business in orbital aerospace, suborbital aerospace, enabling technologies, and aerospace beneficiary. And this is the newest ETF on ARK's list. It's been created in March of this year, and they only have around $63 million in assets under management. And just over the last couple of months, this ETF has shown a return of 3%, which is pretty good to see of this short-term period. And even though space exploration and everything around it is probably the future of humanity and everyone else, we don't know what's happened next, but I'm bullish on this ETF, and I have it in my portfolio as well, just because I believe in space is actually one of the most interesting topics for me, besides investing, of course. And the top holdings of this ETF include companies such as Trimble, the 3D printing ETF, Kratos Defense, L3 Harris Technologies, Iridium Communications, Lockheed Martin Corporation, Komatsu, Tails, JD Logistics, and Boeing. As you can see, ARK has ETFs in different sectors, but all of them actually tracking companies who are very innovative, who are working on cutting technologies, and actually are lined up to make our world a better place, or at least change it in some way. And now the final question that you've been waiting for: should you invest into these ETFs? There are actually a couple of factors you need to consider before investing in any of these ETFs. The first one is your risk tolerance. Investing into high risk and high reward funds like this are not for everyone. As would you be able to sleep through the night if you see these ARKs are actually dropping by 20-40%, which has actually been happening since the beginning of this year? Would you start selling, or would you hold? Or would you actually buy more because you think it's a good buying opportunity right now? Because knowing how you can handle these volatile situations is actually the key when you deciding if you want to invest into funds or stocks like this. And the second factor is your current portfolio before investing into all these ETFs. Because if you choose to invest into ARK funds, you need to make sure that the rest of your portfolio is actually very well diversified, which means that you have a very solid core portfolio with the ETFs and stocks that you can fall back on in cases these ARK ETFs are not going to perform well. And the third factor is your financial situation, which is pretty straightforward and means that with all your investments, You need to invest only that money that you can afford. And this is especially important for risky investments like this ARK ETFs, because you don't know what's going to happen with them next, and they're pretty volatile on the short-term period for sure. And for my Canadian friends, the fourth factor to consider here is that all these ETFs are on the US stock market, which means that if you're going to be investing into ETFs like that, you're going to be paying a currency exchange fee, no matter what the brokerage account you're going to be using. On a Wealthsimple, for example, you're going to be paid this currency exchange at the time of the transaction. On a Questrade, you actually can transfer your Canadian dollars to US dollars, and then you're going to be paid this currency exchange only once. And then with all the US dollars you have, you can invest into US market without any currency exchange fee, which is pretty good. And there's also a trick how you can transfer your Canadian dollars to US dollars on Questrade. I'm going to talk about it later. All these ETFs are actually growth-oriented ETFs, and they're not paying any dividends. We shouldn't worry about this withholding tax, which means you can hold these ETFs on your RSP account or your TFSA account or your RESP account, and you're not going to be paying any taxes at all. And if you hold these ETFs on your unregistered margin account, then you're going to be required to pay capital gains at the time you sell those, and also currency exchange fee whenever you sell those. And to sum all this up, ARK ETFs actually made a pretty big splash around the world over the last couple of years with the huge returns they were showing. That's pretty crazy, right? But it doesn't mean these ETFs are for everyone. And if you have a really good strategy in mind and you're very risk tolerant, you may allocate a very small portion of your portfolio to ETFs like this. And if you're not, on the other side, I would stay away from ETFs like that and invest into core and safe stocks or ETFs that I also talked about in one of my previous videos. You can check it out there. To make sure your portfolio is low risk, you're not anxious about anything at all, and you're getting pretty good returns in return. With all that, thank you for joining me here. Thank you for watching. Don't forget to smash that like button, subscribe to my channel, hit the bell, and I'll see you around. Keep investing. Cheers, bye.